Today I wanted to cover several new things that are happening with the economy and with real estate, but most of all, I wanted to come out here and show you guys how the beach looks out here just before sunset. It is absolutely beautiful. You know, sometimes when I'm done shooting the videos during the day, I'll come out here for a walk on the beach before it gets dark like this, and I think to myself, why am I not making a video out here at this time? Because it is just so beautiful. Sun's not in my face, don't have to wear the sunglasses, but it's still light enough to see all the beauty around here. So I'm sharing it with you guys today. And the first thing I want to cover is, thank God I'm a Floridian. We're hearing all these new things that California is doing when it comes to real estate and their housing laws. You know, they just passed a statewide rent control law that San Diego's having problems with. We talked about that in a previous video. And now they're trying to pass legislation where they don't want landlords to be able to collect more than a 1-month security deposit. There was this story about a couple from the Bay Area, and they were looking to rent a place for about $3,000 a month, right? And the landlord for the place they wanted to charge a 2-month security deposit. So $6,000, right? Plus first month's rent. So it's basically $9,000 to move in plus moving expenses. And these guys are saying, that's too expensive. Nobody has this kind of money on hand. Who can afford that? You know, now we don't just have to worry about how much we earn if we can pay the rent. Now we have to worry about how wealthy we are if we can even afford to move in on all this and that. Now, as somebody who's been in the real estate business for a long time, and I've done hundreds of different rentals with people, pretty much ever since the last housing crash here in Miami, it has been standard for landlords to collect first month's rent, last month's rent, plus a security deposit equal to 3 months, just like these people from California are complaining about. And let's be realistic, even in Miami here, $3,000 a month isn't even that expensive anymore. You know, we have many rentals here that go for more than double that, and they still want 3 months to move in, guys. And on top of that, they'll actually require you to make 3 times the monthly rent as verified income in some cases. So imagine if the rent is $3,000 a month, you need to be proving that you make $9,000 a month for them to even say yes to you. Now, that is not in all cases, but some management companies and some landlords here require that. And for a long time, probably 90% of all the rentals here require that you pay first month's rent, last month's rent, and security deposit to move in. But because people are complaining about this in California, specifically the Bay Area, you know, San Francisco's trying to make it so that landlords can only collect 1 month security deposit for tenants to move in on top of their rent control laws and on top of everything else they try to do to make it more affordable, but in fact it doesn't work, okay? I'm not making fun of the people that don't have 3 months rent to move in. What I'm saying, it is just unbelievable how fast a state like California will just right away jump into the tenant's side of things without even considering what the landlord might be facing. Because right away, if you're in California and you're a tenant, you know, the law is on your side, especially when it comes to evictions. And there's been landlords since the beginning of the pandemic that haven't been paid for like 2 years, guys. So, you know, right away, the law is not on their side. But now if they're trying to limit how much somebody can collect as a security deposit, that would lower even further how far landlords are protected in terms of if the tenant destroys my place, am I gonna have enough money to fix this up? Because $3,000 doesn't go very far these days when you're talking about repairs, right? Or what if they do stop paying the rent and I have to go through an eviction with them? Who knows how long that's gonna take? At least if I have 2 months security deposit, I'll be able to at least pay some of my bills for a little while versus only having that 1 month. But from the tenant side of things, you know, it's not fair for them because they have to come up with more money to move in when the cost of living is already sky high. And also, a lot of times the landlords can be egregious with the security deposits and not give it back and just say, well, you left the place dirty, I'm keeping your security deposit. Stupid things like this that they try to do to keep the money, and the only real recourse for the tenant is to take the landlord to court and sue. And a lot of people don't want to do that, and who could blame them? That's a huge hassle, right? But the reason I want to bring this up, guys, is because I don't know who would want to be a landlord in California right now, because they're just changing so many things over there so fast that are really not in your favor as a landlord. And I wouldn't be investing a single dime into a place like this, where they can just, say how you can use your property. They can tell you who you can and can't rent it to. Oh, you can't do background checks anymore on people. Can't check if they have a criminal background. You can't say no if they have a criminal background. You have to comply with so many different things when it comes to rent control. And now this, not being able to charge the security deposit you want. I mean, where does it end? Is it even your property anymore? Doesn't sound like it to me. And I'm sure a lot of you watching maybe never paid 3 months rent to move in somewhere, but I wanted to just bring this up because it is something that has been commonplace here in Miami ever since the last housing crash. And the reason it became commonplace is because a lot of tenants were defaulting on rent back then. And the eviction process here is a lot faster in Florida than it is in California. But, during a time when we're going through a major recession, the court systems are all backed up with foreclosures and all of this going on, and it was still hard to get people out during this time. So basically, it became commonplace and standard operating procedure back in those days for landlords to just start collecting 3 months rent for people to move in. But in California, a few people can complain about this and try to get the law changed. So it's just kind of crazy, It just goes to show how nuts this world is. Now, a while ago, we talked about how pension funds have been investing into cryptocurrency, and there was a story out today about how a pension fund over in Fairfax County in Virginia has $35 million invested in Genesis, which is another failing crypto exchange right now. And basically, in a nutshell, pension funds try to make riskier and riskier investments these days to meet their pensioners' requirements for what was promised to pay out for people in retirement. And because the traditional investments are not cutting it anymore, they've been forced to take riskier and riskier investments, like investing in crypto, for example. But since this pension fund has all this money wrapped up in Genesis themselves are in big trouble right now too. They have more than 100,000 creditors that they owe about $5.1 billion to right now, guys. So 35 million for them is chump change, yet that's how much these pensioners could be on the hook for if this place goes under and files bankruptcy just like FTX. And lo and behold, Genesis themselves actually had 175 million of their money wrapped up into FTX, and now that FTX has gone under, now Genesis is in trouble as well. First of all, this just goes to show how messed up the whole situation is with crypto right now. The situation's a mess. But the thing that really all this highlights and is bringing into visibility for all of us is the fact of just how highly leveraged everything is nowadays. I mean, there's how many hundreds of trillions of dollars in derivatives out there, which arguably caused the last Great Recession. That was probably a big part of why things went down, why we had this global recession back in 2008. And when you see stories like this with Genesis is going under because they had money invested in the FTX and FTX went under, you can see just how closely connected everything is, because everybody's leveraged to the hilt, especially these big tech companies like this and these crypto exchanges that are getting crushed right now. And that's also why you're seeing so many layoffs happening in the tech sector as well. And I think all this just kind of highlights how fragile our system is when it comes to, if one thing goes down like FTX, look how many other things it's bringing down with it. Crypto was already hurting before that, and it brings down the values of crypto even further, right? And then you have companies like Genesis that are tied to FTX, and it starts bringing those down. And then because pensions were invested in that, it's bringing those down, and it goes on and on and on like that. So everything is leveraged, everything is fake. Nobody really has any real money in anything anymore. And honestly, when I hear stories like this, it is just like a huge wake-up call. There's no way that it's not going to get worse from here, guys, because people are saying that this is already going to be the bottom and everything's going to turn around. and we're not going to have a recession this year. What are you talking about? When you see stories like this that highlight how over leveraged everything is, it only takes a few of the big companies and the big players to have major financial problems to bring down the entire system. And just this one story is proof of that. I mean, what's going to happen to these pensioners, guys? Are they going to get their $35 million back? Are they going to be on the hook? Is the pension just going to say, well, we're going to have to cut your pension 30% because we lost this $35 million? What's going to happen? And what about those people that paid in all this money all this time to have that pension? They were robbed, okay? So nothing makes sense right now when it comes to these things. I think it's extremely wishful thinking for people to just say that, oh, don't worry, 2023, things are going to start getting better, and then by next year in 24, everything's going to be back to normal. There's no way, guys. And you know who I'm really referring to here is I'm referring to all these economists and all these stock market people that say that we already have a very minor recession priced into the markets, and we're basically betting on the fact that the Fed is going to stop with the interest rate hikes or just do one more 25 basis point hike and then pivot after that, and everything's going to be hunky-dory. That's what they're banking on right now. And if you don't believe me, guys, just go check the story down below in the description. These guys are expecting a very mild kind of recession. That's a quote, okay? Mild recession. What are they basing this on? Another big joke. They're basing this on robust consumer spending and a still very strong job market. Hello, what are you talking about, guys? Has anybody been paying attention lately to where this consumer spending is coming from? People are borrowing in record numbers on their credit cards just to pay for things right now. Or how about the fact that the Fed has came out time and time again saying that we are going to make unemployment go up. That is basically part of our plan right now to curb inflation. Anybody ever thought about that either? Apparently these guys aren't getting the message. They're basically banking on the fact that at some point later this year, the Fed is going to pivot, and when that happens, then the stock market's going to shoot back up through the roof. That's what they're saying. But if these guys are wrong, like they probably are, then on average, during a recession, stock market goes down about 44%. So we could see that happening later this year as well. But yet it's funny because you know what all the stock market people are saying right now? They're saying, don't let this stop you from investing. This is a great time to pick up stocks at a discounted price, which that part is true, guys. But here's the part that might not be true, because they're saying it's okay to catch a short-term downfall as long as you're on the positive upswing side when things eventually recover. But listen to what they say and listen closely. In doing this, you effectively buy more shares on the cheap, which will benefit you if the stock market continues its historical long-term upward trajectory. Now, what's the key word in there if you ask me? If. If is the key word. If that happens, right? If is the big one. What if this? What if that, right? Well, what if it doesn't have a big upward trajectory after all this? What if everything stays depressed for a long time? What if we have a lost decade and you just invested a bunch of money in the stock market? What then? It's funny because all this is predicated on the what if scenario, but they're not addressing the other side of the what if scenario. What if things don't recover the way they anticipate? What if we have a global recession that turns depressionary because things aren't looking so good right now? They don't address those what ifs. So I would be very careful on where you're placing your money these days, guys. And literally the very next story that goes right after this is how we are yet again at an all-time high with credit card debt here in the United States. To make matters worse, not only is that credit card debt at an all-time high, APRs are at an all-time high, so the interest that people are paying on this debt is at an all-time high, along with the fact that more people are using debt throughout 2022 than they did in 2021 because they're running out of money. And this is getting so bad to the point where the credit defaults on these credit cards is starting to roll in. Discover Credit Cards, Discover Financial Services, they said that their net charge-off rate, which is how much money that they just have to write off as a loss and send to collections, is at 2.87%, and it's 87 basis points higher than it was a year ago. And during this time, credit card balances have also been climbing, and Discover is actually anticipating the default rate for their credit cards to go up this year anywhere between 3.5% to 3.9%. So it's at 2.87 right now, guys. So that means more people using more credit cards, not paying the bills. How is that not a sign of the recession? This wasn't happening pre-COVID, we didn't see this going on then. So what's happening? What's different now? Maybe everything costs double. Maybe people are getting laid off left and right. Housing's unaffordable. Gas is becoming unaffordable. Groceries are unaffordable. You tell me. According to a report from creditcards.com, about 72% of credit card debtors added to their balances over the past year, and nearly half, 48% of people, took on additional debt, and 24% of these people reported having a disruption in household income. So to me, that's the gauge of the real economy. What's happening over at Joe and Susie's house down the street? How are they doing? Are they able to pay the mortgage? Are they affording groceries? Can they put gas in their car? Are they making the car payment? Who cares about the earnings report from Goldman Sachs or Bank of America? You know what I mean? Let's talk about what's happening with everyday people right now. And it's not just me saying that this is bad, guys. The chairman for debt.com, I didn't even know that was a website, but yeah, debt.com, Howard Dworkin, he recommends that anyone with credit card debt right now should be gathering a plan together to pay it off. And I know that's much easier said than done, but you got to look at doing this right now when these interest rates are this high, guys. Start with the card that has the highest interest rate, pay it off, move down to the next one down the list, so on and so forth. Stop going into debt over things that you don't need. And I've been saying this on the channel all last year. Been telling people to do this because it's one of the main things that people need to do to be ready to buy a house at some point. But even if you're not planning on buying a house, having good credit is crucial to just having a good life, guys. If you want to get a good deal on things, if you want to have a low interest rate when you go get a car loan, or you want to be able to have a good chance of getting approved for an apartment, things like this, it all depends on your credit score now. And as if all of that is not proof enough of the recession already being here, there are more U.S. companies now that are bracing for job losses than ever before. According to the National Association of Business Economics, about 20% of the businesses that are members of this organization are anticipating having to reduce the headcounts at their companies later this year. So they're talking 20% of these companies are anticipating that there's probably going to be layoffs, guys. I mean, how is that not a big deal? That's massive. 20% of these people could potentially be losing their jobs. That's huge. And they basically said for the first time since 2020, more of their respondents are anticipating laying people off rather than employing more people. So that should show you where the state of things are right now with the economy. And there's already signs that the layoffs are working and that things are starting to turn around in the economy, because when we look at the December job numbers, we had 223,000 new jobs added in December of 2022, which is the lowest number that we've seen in 2 years. The Fed's plan is starting to work, guys. They're seeing more and more layoffs. You're seeing the new hires starting to fall. And if things keep going in this direction, we are guaranteed to see the recession later this year, if you don't think that we're already in one. The Fed is anticipating unemployment to rise to somewhere between 4.6 to 5% by the end of 2023. And right now, the number's at 3.5%. So that's still a lot more people who could be getting the axe right now between now and the end of the year. If you've been paying attention, you've been listening to all the things we've been talking about on the channel, chances are you're going to be ready for this. If you're in denial and you're one of the people that's saying everything is fine, well then all I can say is good luck to you. Now I don't know, is it getting too dark out here, guys? I feel like it probably is. Wanted to try something different. Maybe I should have started shooting a little bit sooner before it got too dark, but hey, trying new things is always fun here on YouTube, and I really love making these videos for you guys. And even though every single video doesn't do extremely well on the channel, some of them are breakouts, some of them are just average, some of them are downright terrible performers, you know, I really appreciate all the regulars who come and watch these videos day after day. I see you guys in the comments. I feel like I know you just like you feel like you know me, because you're always there, and I really just want to say thank you for that. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video, and if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.